Welcome to Monday Thoughts for the Week, a production of Global Agri-Trends. Clear, concise, market intelligence. Here are your hosts, Brett Stewart and Simon Quilty.
Good morning, everyone. Brett Stewart here. We've got Simon Quilty on the road in Australia, plugged in with us. And here's our Monday Thoughts for the week, October 24th. And Simon, as always, it's a pile. Now, it's quality over quantity. And you guys may think this is a lot, but just know we thin this pretty hard, making sure we get to the right story in the right way. So, Simon, we've got a lot here to talk about. And 3 or 4 days ago, it kind of felt like maybe a slow week, not a lot to talk about. There's a lot to talk about. We're going to talk about consumer demand. We're going to talk about weather. We're going to talk about how these markets are reacting to the new economy, the high interest rates, and of course, we'll talk about China. So, Simon, welcome. Go ahead and take it away.
Thank you, Brad. Well, the first thing is that, container shipping rates have hit the bottom. By mid-2023 is what the bank HSBC is now talking about. So, Brett, we've seen it in all the markets right now. For example, the stuff I'm doing out of India, pet food into America, we've had a 45% drop in the last 3 months. But the expectation is that the spot rate of freight rates is falling 7.5% per week. And with that, shipping line profits are expected to plunge by 80% next year in 2023. Brett, I can hear a cry and a cheer in the background there from a number of exporters around the world cheering. So, Brett, the Shanghai containerized freight has fallen 51% since the end of July. And at this rate, as we said, it'll be mid-2023 when the bottom is finally got there. Brett, this is good news. It's going to hit the bottom line of every export company across Australia, New Zealand and the US, and Canada, of course. So, Brett, there is more capacity becoming available, as we know, as some of these, disruptions in the market start to remove themselves. Anyway, that's good news, and let's keep moving. US inflation, Brett, across the meat types. So the latest CPI figures for the US economy has got meat, poultry, fish, eggs, up 9%, and overall 11.2% for food, 19.8% for energy, and 8.2% for all other categories. But Brett, it's this enormous difference across the meat types. Poultry or chicken up 17.2%. And then you've got, in the case of pork, 6.7%. And in the case of beef, it actually fell 1.1%, Brett. Share me your thoughts here on, is this more of a reflection on the drought, the fact that beef has become so, being turned off so quickly, but high corn prices continue to drive chicken and pork prices higher? But Brett, share me your thoughts here.
Yeah, I think that's interesting data, because we look at this data and we try to say, what are consumers doing here? And it has gotten really weird. Let me answer your question with this chart, Simon. So here's a US comparison. These are wholesale prices of 73% beef, basically a fast food hamburger patty, chicken breasts, and pork. 72% pork trim, chicken breast. So if you look at this chart, and of course you can see the craziness that happened when COVID hit and we had the shortages on beef. But ignoring that, you can look at this and you can say, okay, that's normal. That box right there, that's a pretty normal relationship. Beef's highest, followed by chicken breast, followed by 72 pork. Now take a look at where we stand today. Up is down, down is up. The sky is no longer blue. So I have no idea. I mean, we have seen chicken breast go absolutely lights out through the roof, up over $3.50 a pound. But the real story here is do we return to normalcy? And I think we do. I think we've had a lot of chaos and craziness in the markets. I think going forward, we're going to resume that more normal pattern with beef back on top, especially with the tight supplies of beef in the US next year, chicken breast falling back in the middle. But time will tell.
Brett, I have one word: rain, rain, and more rain. In actual fact, that's 3 words.
Yeah.
But that is the difference, that once corn prices fall, wheat prices, those input costs, and we know beef is going to tighten up dramatically. I agree, within 12 months, that will look very, very different.
It has been crazy to watch. Take a look at this chicken breast chart. So we had chicken breasts up in 350, 360 at the peak. They're $1.19 today. And it looks like this complete crash on chicken breast prices, when the reality is we are right at the 3-year average. This is normal. We are now back to normal. And so through all of the COVID craziness, the interest rate hikes are working from the Fed perspective. They're hiking rates to bring down commodity prices, to bring down inflation. And yeah, we're far from over. There's going to be more rate hikes, and there's a lot of inflation yet to drive out of this overheated economy. But chicken breasts, they're there. They're back to that historical level. Turkey breast, on the other hand, think about this: chicken breast, turkey breast. Turkey breasts are $6.70 a pound. They are now 5 times the price of chicken breasts, and they're record high. It is completely crazy, Simon. I mean, I like turkey breast, I like chicken breast, I like all that, but I don't think I like turkey breast 5.5 times more than chicken breast.
And Brett, I mean, I get it with Thanksgiving coming, but this has been the case since July.
Right.
So it's not just, the Thanksgiving demand, but it really lends itself to trying to crossbreed a chicken with a turkey and produce what I call a jerky. So who knows? But with that price differential, I'd look at anything when it comes to genetics.
Isn't that crazy? Yeah. And it's really, a lot of this has been high path avian influenza. We know that has
That's a good point.
Severely hit the turkey industry in the US, and it's flaring up again.
Yeah.
And so here's the interesting story. We're going into November, December, Thanksgiving, Christmas. Turkeys are in high demand. And I'm going to end today talking about where ham prices are, basically double a normal ham price. It's getting very interesting. So all of you buyers out there that are trying to get your buying done for the holidays, all I can say is good luck.
Yes.
Sell chicken breasts. I don't know.
Yeah. And one day we'll see turkey on the market. But
turkey.
Anyway.
Simon, have you trademarked that? I think it needs to be turkey. Copyright. Tell us about this story. We have just bloodied up Beyond Meat. We have clobbered them like a wounded seal here for the last 6 months. But tell us what's going on, Simon.
Well, Beyond Meat ties up with Alana, who is a customer of mine in India. So I, am intrigued by this. I know that Alana has gone into this, plant-based protein market for a while. But this recent type between the two is interesting. I can't help feeling, though, you're selling ice to the Eskimos here, Brett, in terms of India is, when it comes to vegetarian, given 80% of the population is Hindu, really, they are the experts when it comes to vegetarian meals. So, and, if you're trying to sell a fake meat product like beef into this market, it's like selling, asking a Hindu to eat their mother. It doesn't quite work. So the only real opportunity is chicken in terms of substitution for chicken. It is very popular in India, but to me, Brett, it's going to be a finite market. And once again, I don't know, but this may smell of a little bit of desperation.
Yeah, I definitely smell desperation. When we were first, it was 5-6 weeks ago, we were showing the Beyond Meat price at $26 a share. It was $13 last weekend, Simon. $13. Mm-hmm. It just continues to collapse.
Yeah.
So let's move on. Oh, go ahead.
Well, Alana is an amazing company in terms of their ability and their professionalism. So if anyone's going to make this work, it's Alana. But
Yeah.
once again, we wish them well.
Yeah. So maybe the big story, and if we boil down everything we're talking about, you mentioned this, Simon, the three words, rain, rain, and rain. And from North America, it would be the lack of rain, rain, rain. The La Nina pattern continues. This is the sea surface temperature anomalies as of October 19th, last Thursday. So you can see here where that is. The blue region is still blue. The Pacific, equatorial Pacific, is still blue. Cooler than normal, less evaporation. This lends itself to dry weather in North America, and look at Australia, completely surrounded with that warm equatorial water. Coming into your monsoon season, Simon, and we'll talk a lot about that, but it's come maybe a little early. So a 3-year La Nina. We've sent out the bat signal to Art Douglas. We're going to be planning a call with Art to get an update on his thoughts. This is extremely rare. And Art is the one guy on earth that understands these long-term weather patterns better than anyone. He told us one day, as a grad student, they were cutting trees down, trying to count the tree rings to measure La Ninas back into the 1500s. I don't know anyone who's went that deep on La Nina patterns. So anyway, look forward to that. That'll be coming with Dr. Douglas. But this La Nina pattern is severe in both North America and in Australia. You can see the US drought monitor. It just continues to broaden. And now you can see that drought look down even into the southeast, but clear across the country. The US cow herd now, 74% of the cattle inventory is in a drought. We continue to see the cow herd liquidation. But there's another problem, Simon, that maybe wasn't on our bingo card at the beginning of the year. That drought has now covered most of the Mississippi River Basin, which is the main transport for US grains and soy to the ports. And so if we look at this Mississippi River Basin, we usually look at the drought monitor for cow herd. There's the monitor, there's the river basin. And what we're seeing, real problems on the Mississippi River. There's a barge pushing some light, maybe empty barges down the river. The Mississippi River at Memphis just hit the lowest water level on record last week. You can see how dry it is. There's pictures of people out walking out on the riverbeds, out in the dry dirt. In a weekly report, USDA said 976,000 tons of corn, soybeans, and wheat were inspected for export at the Mississippi River Gulf Coast the weekend of October 6th. That was the lowest first week in October in 9 years, and down 22% from the 5-year average. There are elevators out there, Simon, that have quit taking product. They're not taking grain right now because they simply don't have anywhere to put it. This is a major disruption for the rest of the world, and it's going to be a bit of an oversupply in some regions in the US.
Mm.
The cost of sending that product down reached 106 a ton in October 11th. September 27th, it was $50. A year ago, it was $28. It's 106 a ton. And that's if you can even get it booked. You can't get barges booked right now. So they're rushing to secure the shrinking number of spots. Plummeting water levels are projected to drop even further in the weeks ahead. So those global feed mills that are waiting on this US product are going to be in tough shape. So that's the US story. Cow herd drought, lower levels on the Mississippi, no real end in sight. The La Nina's in place. Simon, you got up close and personal with the effects of La Nina. Tell us a little about that.
I did, but before I do that, Brett, just one last comment on that, the impact on the herd in the US. So now it's at 74%. 1 month ago, it was 55%, that ratio. And as Art said at the time, it's going to get worse before it gets better. And he's spot on. So we've jumped from 55% of drought-affected cattle areas now to 74%, Brett, in 1 month. And I just think that says a lot, doesn't it, about the last 4 weeks?
Yeah, things are in tough shape and no real precip on the horizon. We're just not seeing that come.
So, Brett, yes, I did. Last weekend, we had a battle of all battles, trying to make my mother's house a fortress to stop the water from coming in. Brett, we were 5 centimeters short. What is that? 2 inches thereabouts before the waters started coming. And we evacuated midnight Sunday night and walked out of here to dry ground and literally walked to a friend's place to stay for the night. Brett, it was disappointing, but as I said in our newsletter article, the amount of incredible people that came to help was extraordinary. And I guess it brings to me, the importance that even us Global Agri-Trends as an organization need to reach out to people during those times. Brett, the rainfall in the last week or month has been phenomenal. You can see here how much above the average has fallen, particularly in New South Wales, Victoria, and in parts of Queensland and South Australia. And Brett, in the last week, it's mind-blowing. And so down there in Victoria, in the southern area there, you can see what impacted us and led to that extraordinary flooding event. So Brett, there's still more to come, and all eyes are actually on the coming wet season, which the Bureau of Meteorology is saying that they're expecting 11 cyclones. The norm is about 9 each year. This will be above average, they're claiming. But Brett, these floods in Victoria, New South Wales and Tasmania are going to lead to a rise in food prices. And so it's something to watch, as we're already up against high inflation, as you are in America, but you can see that vegetables, fruit, meat, and in particular dairy items are going to be impacted dramatically. And Brett, it's not just those items, but the grain harvest across Australia also looks like it may be impacted here. Rabobank came out and said that the near record 62 million tonnes expected is going to probably be downgraded at some point here, Brett. So, Brett, something to watch. Some of these global supply patterns are likely to change before the year is out, thanks to La Nina. And Brett, we've seen also the concern of foot and mouth disease now spread into the pet food industry, where because of biosecurity fears, they're now banning pet food from being brought into Australia by mail order. Brett, I think this is a great move. I'm surprised it hasn't been done earlier, but having product, I guess, coming in that is undetected, untested, and spreading throughout all parts of Australia, I think this is common sense prevailing. They do say there in the final line that for products that are clearly non-animal based pet food, such as vegetarian pet food, the onshore management requirements remain unchanged. Brett, I just want to know how you detect before opening the parcel vegetarian versus meat products. But anyway, we'll wait and see on that front. And FAO cooling of food price trends globally. Brett, we've talked about this a lot, but I guess what we're finding here is that the commonly traded food commodity averaged 136.3 points for September, down a fraction, 1.1% from October, but still 5.5% higher than a year ago. But it's the vegetable oils that have decreased by 6.6%, Brett, that kind of jumps out at you the most here. Brett, we're seeing, therefore, I think, a pretty interesting development globally, where it's almost like a two-speed recovery amongst consumers. So today I was talking to a customer in America who sold ribeyes, as in prime, at $20 a pound. Never before in his life has he sold ribeyes at that level. So the demand for premium products in grocery, fresh perimeter departments surges. Prime beef has seen 11% increase in volume as of April 2022 versus the year prior. And all this work has been done by the consultancy group Damon, and Andrew Mobley, the senior director, made these comments. He said more premium or high quality varieties are in demand. And additionally, with many consumers continuing to eat at home, they're looking for that upgraded experience at home instead of eating out, Brett. And inflation, of course, continues to have an impact, but Brett, it's 75% of consumers that rank inflation as a problem. So to me, Brett, we're really talking probably about the top 10 or 15% of consumers that exist in this premium end of the market. And he said there's a real shift towards private brands looking for better value for money, 70% to be exact. But here's the final one that I find interesting. Gen X and millennials in particular are least concerned with food inflation compared to all other generations, with 37% of 21 to 31-year-olds having high hopes for their finances a year from now, compared to 22% of the general population. Brett, that just spells out to me that they are young, that there's plenty of work around, that labor is in tight supply. These guys' incomes or women's incomes are in good shape. They have very few responsibilities and they can go out and afford the expensive meat if they desire. But what are your thoughts here?
So much hope from our youth, and it's going to be hard to watch their dreams crushed in front of them, Simon. I fear that over the next year, that percentage response is going to change. We're all a subject of our experience, and I think there's a lot of people with a little more experience. If you lived through the 2008 recession, you're nervous right now.
Yes.
But these people, they were children during that recession and really didn't have that experience. But I think this is interesting. Growth in premium meat demand from the US. Now, we all know we're on thin ice. The rate hikes are coming. We're going to have more rate hikes ahead. The real estate market's slowing. But I went through the economic data today for the US, and retail sales high, personal consumption expenditures high. They're all kind of topping out, but nothing's turned yet. And so we're just in that ominous phase of, I think what you described, best to panic slowly, Simon. So now that's America. If we look at the UK, they're in a little different spot. Tell us where they are.
Well, Brett, it's all about fish heads. And so the retail group Waitroses, in their latest report, have found that the demand for fish heads have risen by 34%. Beef shin, ox cheek, lamb necks are all up 23%, 9%, and 4%. And UK inflation at the moment is 10%. And, Brett, it really is a tough time in the UK. Poultry and meat prices have risen 17.2% and 15.3% respectively. Brett, I think this is interesting and quite different, dare I say, to what's going on in the US. But once again, this is probably talking more about that 75% group, as we know, that are very price sensitive. But they're introducing what they call the forgotten cuts, which back in 2008, in the Great Recession, all these items like pig trotters, beef skirts, fish heads were very, very popular. So, Brett, history is repeating itself. The UK have brought it to another level in terms of looking how to cut costs. And all I can say is next time you have fish, put those heads in the freezer, I say.
I hope. I'm going to save more money right now, Simon. I'm going to commit to spend less and save more. I don't want to be boiling fish heads. We'll see how it goes next year.
And Brett, we've got two supermarkets potentially merging in America. We've got Kroger and Albertsons talking about a merger. I know it's probably coming under some scrutiny by legislators within the US, but Brett, this would make an extraordinary combination. 2,800 stores of Kroger, Albertsons 2,200. What a powerhouse that would become, a combined market value of 50 billion. Brett, we spoke about some of the, what would happen after COVID, the desire to get bigger, to invest up and down, the supply chain. But Brett, this truly is, part of what you would call a super merger. But give me your thoughts here as well.
It's interesting, right? And retail power is strong in the US. If you look around the world and go look at retail margins, I'll talk about China's margins here in the pork section, but boy, US retail margins are strong, and they're always strong. If you look at the margin in the chain, all the way up through from farmer to producer in meat, retailers have a good, healthy margin, and they have for some time. It's really hard to go after retail margin. It's pretty much stuck. And so this really just increases that leverage in the retail margin.
Agree.
So around the world, the soaring dollar leaves food piled up in ports as world hunger grows. And you can see some of the currencies here from Ghana, Pakistan, Sri Lanka, Egypt, and Bangladesh. These poorer countries are getting clobbered by the US Fed rate hikes, the higher dollar. It means they can buy less and less of US raw commodities. Reduced purchasing power, dollar shortages are compounding wider strains across the global food systems following Russia's invasion of Ukraine. Get this, the IMF has warned of a catastrophe at least as severe as the food emergencies in 2007 and 2008. This is going to be difficult to watch, and there's really nothing anyone can do about it. It's a tough situation, especially in the third world. If we look at Egypt, wheat is now in short supply. We've been talking about this for a long time. Egypt lives off their winter wheat crop into fall. Fall, winter, they turn to imports. And you're never as tight in your wheat supplies as you are right before the next harvest, which will be next May and June. And so between now and next May, Egypt's in a tough spot. Here you can see 80% of millers have run out of wheat and stopped operations. I mean, that is a tough, tough deal. This is 200 million people that live off subsidized bread. You can see here, this is a major concern for a pretty substantial country. Other countries at risk would be Turkey, Ghana, North Africa. There's going to be a lot of countries we're going to hear more about as we see this winter progress.
Brett, also the issue for Egypt is their currency has collapsed. So this problem has amplified itself because of currency as well.
Absolutely. All right, on to global diseases, Simon.
Brett, it's a favorite subject, but lumpy skin disease continues to spread. Now another state in India, Karnataka, has also now got lumpy skin disease. Brett, I think as Australia starts to kind of realize that lumpy skin and foot and mouth are now, I think, endemic, along with Troy Setter's thoughts there within Indonesia, I think we need to get into India and understand how lumpy skin disease is spreading. Is there a relationship between the monsoons, the insects, and how they move? Or is it simply just through poor cattle control movement, Brett? But nonetheless, it's becoming clear that there is a real issue here. In this report, they say the disease gets spread by mosquitoes, flies, lice, and wasps by direct contact among cattle and through contaminated food and water. And Brett, as you raised only yesterday or the day before at a conference in Australia, you basically said, you know, we need to do a lot more research. And that's part of our recommendations, and I totally agree. Brett, record-setting avian flu across Europe. So right now, the flu epidemic, avian flu epidemic, is now its worst in history. The Netherlands, 300,000 hens have been destroyed. Overall, they've culled 6 million birds in 98 different outbreaks over the last 12 months. But Brett, across Europe, there's been 2,500 outbreaks altogether. 48 million birds have been culled. So Brett, no wonder certain bird, I guess, prices of, that you've alluded to are jumping. But 37 Europe countries have been impacted so far, Brett. And bird flu continues to be an issue in North America. In the United States, 47 million birds have been culled across 41 states. and right up there with the previous outbreak in 2015 of 50.5 million. Brett, I can't help feeling that we're going to break that 50.5 million record that was set back 7 years ago. But share me your thoughts here.
Yeah, I think so, Simon, probably sooner rather than later. As we go into winter, HPAI is worst over the winter. We're in October and it is all over. It's all over America. It's all over Europe. Remember now, this is mostly, at least in the US, this is mainly affecting turkeys and egg layer hens. And so those are the two commodities being affected most, are eggs and turkey. We talked about that high turkey breast price. This is a major reason why, and it is far from over. Difficult. I mean, it's tragic. I talked to somebody today, a turkey farmer, and he talked about what it's like to go out there and foam those birds. That it's just horrible. I mean, it's terrible for any farmer to have to euthanize their stock, and really a difficult situation. It's not going, I don't think it's going to get better over the winter.
Yes, I tend to agree. And Brett, the latest work done on case-ready products in America, that this was the Cryovac brand national meat case study. We're going to look to do an interview with them in the coming week. But what I found here interesting was that back in 2002, when they first started this study, 51% of product was being cut and processed at the store level. That was their first report. Now, 83% of meat in stores is being processed and packaged off-site at a centralized location. Brett, that is a dramatic change, isn't it? And I think talks so much about the labor problems that exist across the world. Brett, let's save some of the what comes out of this study for our interview, but I think it will be fascinating to look at some of the trends that are coming forward.
All right. So frozen beef inventory higher. We've had a number of requests from various subscribers looking for those telltale signs that things are going to start to tighten in North America. The latest figures are actually out next week, Tuesday in America, but for what it's worth, these were the frozen beef up 24% year on year. Brett, as we move into the back end of this year, I can see that rising once again, similar to the trends of last year, 2020 and 2021. Brett, my thoughts are that strong demand, even with a high US dollar, is likely to continue at least until the end of the fourth quarter. So strong demand, these are reflecting both imports and exports, Brett, and probably exports are having a much greater impact than the imports so far. Brett, when we look at the US steer prices, and this is since the start of 2020, it just goes in one direction. And today we're almost at $150 per hundredweight. But Brett, when we compare that to back in 2014, you can still see that we're well short of the mark, and still some way to go to reach those record levels that we've spoken of. But Brett, I do not rule out $160 per hundredweight within the next year or so. So Brett, I think to me, this is an important kind of sign that it's going to be challenging as the market tightens up in 2023. Those prices are only going to go in one direction, and that's higher. Mm-hmm. And Brett, US beef packer margins, we've seen now that they're sitting just at around about $100 US per head. Brett, it will be interesting to see in December this year whether those actually go into the negative territory, which would be the first time in many years that we've seen US packers in terms of beef go into a negative space. Brett, what are your thoughts here? Yeah, that's pretty incredible. I would tell you, I just spoke to a group of cattle producers here in the US, and I don't think anyone's shedding any tears for the US beef packers when you look at this chart. The margins have been absolutely phenomenal. Now think about this, Simon. So we are going into tighter supplies next year, and we have, I don't even know what the count is anymore on how many new beef packing plants are under construction in the US. They're building plants all over the Midwest. Government subsidies, the government's encouraged it. The solution to those high margins is we need to build beef plants. Unfortunately, these plants aren't even really beginning construction until the situation has pretty much straightened itself out here. The leverage has changed. And so it will be interesting. This has got to be unnerving for those that are building new plants, but it will be an interesting year next year for sure.
And US cattle on feed, Brett. And to me, this is probably the first real sign that things are starting to tighten up, where those numbers on feed are starting to come off. This is the forecast by Kevin Boss to PSI, but he's talking around about a 6% fall next year in the first half of 2023, the 6 months compared to this year's first half of 2022. So Brett, some initial signs that we're starting to see the tapering off in terms of numbers on feed in the US. And to me, we're starting to move down that tightening supply situation, which from an Australian point of view, can't come quick enough at the moment. And carcass weights as well, Brett. Once again, we're starting to see, you can, in terms of 2022 versus next year, but that overall carcass weights are probably going to drop somewhere between 10 to 15 pounds per animal. So, Brett, that obviously is, with regards to the high corn prices and overall the drought-affected animals are being impacted. But when you start to line up, less animals on feed and falling carcass weights, it points to a fairly dramatic impact on production, as we know. So, Brett, looking into next year, once again, PSI, Kevin Boss, is talking about a 10 to 15 pound fall per month, at least for the first 6 months of next year. And when we look at the beef weekly cow slaughter here, Brett, you can see that we're still running about 12% higher than this time last year. That's for the year to date. And once again, we look at PCI's forecast here. They're expecting a 19% fall in the female kill in the first 6 months of next year, Brad. So it really does beg the question, come January, February, are we going to see this reflected in pricing pretty quickly? Given the enormity of that fresh market and its impact on what's going on day to day in America, I can't help feeling it will be an impact pretty dramatically when we get into Q1 of next year, Brad. And as we go to the percentage of choice, prime, and the grading systems, you can see that the availability of prime is getting harder and harder as the drought heads on here and starting to fall percentage-wise versus the previous years, Brett. So overall, it's making that high exclusive end of the market even tighter. And we know, as we said earlier, ribeyes for prime sold at a record level today for one of our subscribers at $20 per pound. And Brett, our figures and the work and everything we've pointed to is saying it's very tight at that end of the market. And if you're a retailer, Brett, as you've alluded to, retail versus wholesale, the margins just continue to get better. Brett, share me your thoughts on this and some of those previous slides.
Yeah, right. I don't think you can explain it any better than that, Simon. You look at retail wholesale prices, the margins have been great. And we saw the packer margins enormous. We've seen the retail margins enormous. And I think over the next year, we're finally going to get to see some of the cattle feeder margins and cattle producer margins pick up. Pretty shocking. I think what we're headed for is going to be, it's for real. I think you look at this data, the cement is hardening around this tightening US beef supply.
Agree, Brett. And look, you can see some of these 73% coarse ground, 81% ground beef. You know, Brett, it really, and we said the last month or so has been particularly bad in the drought. And these prices to me simply reflect just that heavy, heavy cow kill and that amount of lean meat starting to come forward, Brett. And, you know, it's a repeat story across many of these items. And 50s, you know, it will be interesting to watch this as carcass weights fall. I can't help feeling that as we move into next year, that we're going to see the value of 50 start to move higher. It's a seasonal aspect as well. And as you can see, last November, it was at a bit of a low point. I think we're there again and expect this to move higher as we move into Q2, Q3 of next year with that seasonal demand. Domestic 90s, it's a similar story, Brad. You've got drought-affected animals, and in terms of when the rain comes, there could be a dramatic turnaround here, which we've talked about before. So at the moment, the drought is impacting across a lot of different items and starting to drag imported down with it. You know, I've heard prices today on 90s domestically frozen at 230, Brett. So imported is at 260, and I've heard frozen 90s domestic today traded at 230 FOB in the US. Brett, there's still more pressure to have on that market is probably the take-home message. And we're seeing the impact in inside rounds that's being impacted by these drought-affected animals. And you've seen peeled knuckles, the same deal as well. And the list goes on. Interestingly, bottom flats have held their own for the moment. We've got, I guess it's not until March, April next year, St. Patrick's Day, where this picks itself up a little, Brett. I'm surprised that these have actually held so well, considering what's been going on with other round cuts. Shoulder clods, a similar deal. Everything, Brett, is impacted by this drought. Brett, I put out a paper last week. Here's a revised thoughts on the ECI. I kind of, given the amount of rain expected over the next 2 to 3 months, I've kind of slowed down basically the fall from October this month and expected 125 cents to February 975. But Brett, when those dry conditions come forward next year, and I think they will, and the plants open, and I think there's some pent-up supply to come through, I'm expecting a fairly serious fall until May. February to May is where the most dramatic fall is going to occur, Brad. So one to watch for next year, and then I think we'll find a new trading level between 765 and 860 from May until the end of the year. Brett, recent figures by MLA have come out here talking about their sheep projections. They've got 76 million head at the end of this year, 2022. At the end of next year, 78.8 million. Brett, I'm not so confident about these dramatic increases. We've talked about the fight over land and its usage. We do know there's a migration from the west to the east and a liquidation in the west of a lot of sheep as we speak. Brett, I need to have a closer look at these figures. I'm a little surprised that they're so aggressive in terms of the flock size.
All right, pork thoughts. So let's start out with this, Simon. Corn prices. And you can see the China corn price still above $10 a bushel US. US and Brazil right there neck and neck, about $7 a bushel. But the currency moves are what's making that Chinese corn price look cheaper. It's not cheaper in renminbi, it's cheaper in US dollars. In fact, in US dollars, it's 60 cents cheaper. So you think about what these currency moves do, those are some pretty big moves, and it really does have an impact. But if we look at that China price right there declining, here's the China price in Chinese renminbi, and you can see the Chinese corn prices are not going down. But what's most shocking is look where soy meal is. The Chinese farmers are basically go into fistfights here for soy meal. It is shocking to see soy meal 5,500 renminbi per kilo. And it's not just hog farmers, it's the aquaculture industry, it's all feed. But that is an incredible run. This market is still paying more than anywhere in the world for feed right now. And it's only working out in the hog sector because they're making good margins. In fact, they're making so much margins that the Chinese government came out and said to all of you hog farmers, we're worried about the price going higher. Please sell more pigs now so the price won't go higher later. And I know that sounds absolutely foreign anywhere but in China. I read that and I think, I've met Chinese hog farmers, and I'm not sure their brain works much different than hog farmers around the rest of the world. I don't think they're going to do this very well. I don't think they want to, but the state planner leaned in on them. The government said, hey, look, you guys got to get some pork out the door. We don't want the price going up anymore. The companies who are not named by the NDRC will take a lead in ensuring supply and price stability in the market, release fattening pigs in a timely manner, and speed up the pace of slaughtering when necessary. In the US, we would call that antitrust laws, and we would throw the book. These packers can't collaborate to adjust prices in any way. In China, not only can they, but the government's encouraging it. And by encouraging, I'm not sure what encouragement is used, but I think it's more than just a simple memo, hey, please sell hogs and keep the prices from going higher. I think there's probably some more teeth in that than what we're hearing. I don't know how effective that will be. Historically, you hear this stuff out of China. I don't think it makes too much difference. You got to remember, in China, there's still 30 million plus small hog farmers. The big guys are less than 25% of the industry. Farmers are farmers. They understand ag economics better than anyone. And if there's a chance prices are going to go up, they're going to ride the wave higher. So anyway, I guess what it tells me, Simon, I can hear a little bit of a voice of desperation out of the Chinese government.
Agree.
Here's what those Chinese hog prices look like. The daily price surged higher. We're now at 28.2 as of last Friday. That's at 191 a hundredweight for a live hog US equivalent, and it's 254 carcass weight equivalent for a live hog US equivalent. And it was only a few weeks ago, Simon, I was saying, I think we're going to get above 25. By the end of October, we're going to break 25. It took us 2 weeks to go from 24 to 28. When this market moves higher, it moves higher quick. And it's pretty shocking to think about the tough economy, COVID lockdowns. It just tells you how tight those hogs are. Now, we've talked about hog futures in China. Here's a look at the Chinese hog futures. That's off that Chinese exchange. Now, this is a weekly chart. I put a little line in to get us to 28 where the daily price is. But you can see what the hog futures in China are saying. Lower, lower, lower. We're not going to stay here. We're not even going to stay here till November. These prices are coming down. Now, I went back to last June, or to June 15th. In June, I was saying these prices are going to zoom and we're going to breach 20 and we're going to head for 25. At the time, back in June, you can see those prices were 16 RMB. The Chinese hog future said, no, 1820 is the peak. Right now, that November hog contract is up 32% from where it was back in June. I'm not giving anyone any kind of trading advice. I'm not a broker. Past performance is not indicative of future behavior. I need the fine print. But Simon, we talked about this and we said, if there was a way to get long on those Chinese hog futures, it would have been a good move. Yeah, it would have been a 32% move in 2 months, 3 months. So,
Brett,
anyway.
I am still flabbergasted at the 19% fall that the USDA put out as their forecast for China pork imports for next year. I can't help feeling that there was, what's the best way to describe it? That the negativeness that the Chinese government wanted to portray was reflected in those figures.
Which is frustrating because those reports come out. It made big headlines, Simon. When that report came out, it affected the stock price of US companies, of meat companies, and Brazilian meat companies. But yet we sit here and go, those numbers flat out are going to be wrong. China's not going to import less pork next year than what they imported this year. I'm fairly
Possibly
confident.
they may import more.
Yeah, the likelihood is. Now, the problem for the US is 28 RMB is still too cheap. We've got to get 31-ish to offset the 25% retaliation tariff and the frozen discount. They don't like frozen pork. They pay a premium for fresh. So the way this market moves, we might be there in the next week or two, Simon. We might be back in that 30 range. I would expect we get 31-ish. We're going to start seeing some orders, bigger orders for European pork, and maybe some nibbling around the edges coming into the US markets as well.
Agreed.
Chinese piglet prices still very high and kind of bumping higher. They haven't kept pace with what we saw there during the ASF shortage. But boy, I'll tell you, 58 RMB for a Chinese piglet is a very high price. And I think what's happening, Simon, I think it's the same story. They learned last time around, the first guys to get inventory around them make the most money. And they're not worried about productivity or pigs per sow per year. I think the game in China is breed market gilts and get as big as you can, as fast as you can. That puts our timeline out into really out into August, September of next year. We could see the roller coaster reverse and oversupply hit the markets as we go into next fall. But between now and then, you just can't make them fast enough.
Agree.
So I mentioned, Simon, we're looking at China watching a year of the worst economic performance in modern history, potential for actual recession in China, lockdowns, people shouting from their balconies for food, perpetual lockdowns, COVID camps, just the total disaster that's China. Beef prices are above a year ago. Pork prices are 80% above a year ago, and even poultry prices are up 24%. This is a confusing market at best, right, Simon? But I think anyone looking at the road that China was going down this year would not have expected these kind of reactions in the protein markets. And it just tells me that Chinese market for protein is strong, and it's partially due to tight hog supplies. That has a major impact, but that luxury item beef continues to see demand out of China. Just a couple charts here to compare US and China retail pork prices. You look at that and go, wow, US retail prices are more than double China. Remember what we talked about retail margins. The Chinese retail margin on pork is virtually zero. The retail pork price is almost identical to the wholesale pork price in China. You don't make money selling meat in China. In the US, you make huge margins. So here's one way to look at it. US consumers are paying much more for pork than Chinese consumers. However, if we look at Chinese retailers, they're buying pork at $2.30 a pound. US retailers are buying it at $1.03. That's our cutout. And so it's a very different story. You got to remember, there's no real retail margins in China. The retail price is the wholesale price. And you look at this and say, boy, we ought to be shipping. We're not quite there yet. We need some more upward movement in the Chinese hog market, or we need these US pork prices lower to spur orders. I don't think anyone wants them lower, but the hog prices in the US remain pretty durable on a historical basis. And it's a good thing because corn is $7 a bushel. And so here we sit with that $93 hog market in the US. That's right around break even for a lot of producers today. Again, expensive corn, somewhere around break even. December, though, takes us down to 86. And it is a seasonal decline, but it's not as sharp a drop as we would expect. Normally, we would be sitting here at $75, $78 hogs. And the blessing for the US hog industry is that tight supplies came into this inflationary environment. We started into this year with tight supplies due to animal health issues. And thank goodness, because otherwise we'd be sitting here with $7 corn and $78 hogs. You can see the tighter production here. The real declines we saw in 2022 were Q1. We've pretty much paced 2022. But if you look right here, this is the big question mark, is Q4. We saw last week dip lower when it should have been surging higher. And the question is, can we hold that 2021 level? Probably, as we go through the year. Relatively tight supplies. That being the case, look at our ham price, $1.15. Normally hams would be 60 cents right now. In fact, you can see how tight the 1st of October is. Every year hams are 60 cents. They are virtually double the normal price. That's why China's not buying. People see these high Chinese hog prices and say, why are they not buying our pork? Well, the main cut they buy is double what it normally is. And I think we all,
Mexico.
And that's because of our friends to the south, right?
Yeah.
There's the Mexican hog price right there hovering at record high levels. That's because of high corn prices, that imported corn market, and disease issues in Mexico. And I can tell you assuredly that our ham prices follow very closely that Mexico hog price. And there you can see, this is in pesos per kilo. US hams right up there, keeping pace above those Mexican live hog prices. And that's what we would expect. So when we look at Mexico, they're going to keep buying US hams. They're going to really keep China under wraps from being able to buy until that Chinese price goes up. I don't see a break anytime soon in this ham price or in the Mexican price. Take a look at the difference in hog prices. If we convert that Mexico hog price, it's $1.32. US hogs are at 93 cents right now. So we're going to continue to move hams in a big way to Mexico. We're not shipping year over year gains in tonnage. We're just shipping higher prices. And so Mexico is going to continue to be very supportive to that market. All right, Simon. Well, let's wrap it up. Key thoughts for the week. What are your thoughts on global consumers?
Brett, there's definitely a two-speed recovery between consumers, and those in the elite end of the market still are willing to step up and pay really good money for the quality end. And with that is Wagyu, and with that is also Angus and chilled. And I put lamb in the mix as well. So Brett, but you've got also then the middle class that are feeling the pinch. And there's no doubt that, you know, we're seeing a preference to dumb down. Fish heads may be going a little far, but ground beef is the often go-to, as we know. We've seen Japan move down that path. We've seen, to a certain extent, China move down that path, and Korea as well. They're all looking for grinding meat as a cheaper alternative. Brett, it's an interesting a two-speed consumer recovery. Now, a correction in equity markets and more higher interest rates, will we see that elite end of the market pull back? History says that if it's a major correction like 2007 and 8, then yes, we may see a slowdown in the elite end. But up till now, Brett, it hasn't occurred.
And I think we're a ways out in the US. Like I said, I went through a bunch of economic data today, and US consumers are nervous. We're feeling the heat, but there's still money in the bank right now for most US consumers. And there is a burn rate on that money. We're just not there yet. La Nina is still taking a toll on both North America and Australia. Extreme floods, extreme drought. What's surprising, Simon, prices are higher in both countries because of it.
And I can lay claim to that, Brett.
Yeah. So.
And telltale signs of tighter US beef supplies just starting to appear. So falling weights, fewer cattle on feed, and lower kills are now expected. So Brett, I think we're going to see this really kick in January, February of next year, Q1. If you're an Australian, New Zealand packer, or a Canadian packer, this can't come soon enough, as the US drives, I think, global beef prices right now around the world in all our key markets.
I agree. And that strong dollar is just going to really solidify the US place at driving global beef prices. China hog prices pushing into those extreme levels. The roller coaster is back. We're now approaching 30 RMB. The profits are soaring. The government's trying to intervene. We've heard this before, and markets are like airplanes. They don't stay up there forever. But for right now, the Chinese hog markets are flying high. US orders are not quite yet viable due to those high ham prices, tariffs, frozen discounts in China. I think, though, if we continue to see that price push up, and it may take a little breather for a week or two, but push up, as we move in, especially November, December, ahead of Chinese New Year, that's the opportunity to see China come into global markets. Honestly, Simon, I don't think they're going to come and just ring the bell on US pork. We saw last time they bought just as much US pork as they could without changing our market. They're very good at that. We have a lot of political friction with China. We are going to send more pork to China. I don't think it's going to be exceptionally huge volumes, but I think we will be back in that market in the next 2 months.
Brett, all I can say is thank goodness for Mexico.
There we go, right? Mexico's high pork prices, very supportive. They are the champion of the pork cutout right now. We've got those ham prices double where they were. They're keeping those hams out of China's reach and supportive to the holiday ham pricing with turkey. So get making your holiday plans, dinner plans now. If you want to have a nice turkey dinner for Thanksgiving, you might want to look at financing plans for that Thanksgiving turkey.
Good job, Brett.
Likewise. Thanks, Simon. That was a great rundown. I hope everyone continues to see value in this. As Simon said, he talked about the flooding. If you're struggling with something, give us a call. Let us know what you're looking at. If we don't know the answer, we've got a pretty good global network and we can help you try to find answers. But we sure appreciate the support, appreciate all of your continued support, and don't hesitate to shoot us questions, feedback, and thoughts.
Brett, I'm just about to go and talk to 300 farmers down here in Gippsland. And, there's good news and bad news, but I think at the end of the day, the long term looks good if you're an Australian farmer. It's just, you got to get there, is the message.
You got to get there and you got to keep those diseases out.
Correct.
All right. Well, thanks, Simon.
Brett.
Hope everyone has a great week.
Cheers.
This has been Monday Thoughts for the Week with Brett Stewart and Simon Quilty. This podcast is a service for subscribers of Global Agri-Trends. Clear, concise market intelligence. For more information, visit our website at www.globalagritrends.com.